Hello and welcome to The Trade. Before we get to the charts, let's take a look at what's going on at a macro level. Iran has said it's considering attending peace talks with the United States in Pakistan. However, Iranian Foreign Minister Abbas Araghchi is saying that continued violations of the ceasefire by the US are a major obstacle to continuing the diplomatic process. And President Trump said it's highly unlikely he would extend the 2-week ceasefire with Iran, which expires on Thursday, if a deal is not reached before it ends. President Trump has said he believes the nuclear deal the US is currently negotiating with Iran will be better than the 2015 international agreement to curb its nuclear program, saying that the deal that we are making with Iran will be far better. Well, Kevin Walsh, meanwhile, President Trump's nominee to lead the Federal Reserve, will tell his Senate confirmation hearing on Tuesday that he's committed to ensuring that the conduct of monetary policy remains strictly independent. That's according to prepared remarks he released, and he went on to say that inflation is a choice and the Fed must take responsibility for it. He's repeatedly criticised Fed policymakers for blaming the post-pandemic burst of inflation on supply shocks. And US Treasuries were little changed overnight. Australian 3-year government bond yields, they fell to 4.6, the 10-year at 4.95. US dollar index slightly lower, the Aussie trading at 71.7 cents. Let's get across the charts now. Hebe Chen joining us from Vantage Markets. Hebe, welcome back to you. Great to get across what you're seeing, particularly in terms of technical analysis. Now, let's begin on Wall Street because we are in earnings season, and one of the Mag 7 due to report this week in Tesla. What are you seeing?
Good morning, Andrew. Thank you for having me today. Yes, exactly. Tesla, as the number one company out of the Mag 7, is likely to pull some attention away from the geopolitics this week and potentially bring the focus back to the corporate fundamental. Well, focus on Tesla, we do think that the earnings per share focus is actually likely sitting at the weakest level, means the bar is actually not very high for the Tesla this earnings. But also quite important is that we also seeing some of signs of improvements likely beneath the surface, which makes me feel more positive about Tesla heading into this earnings. A couple of things happening in the past earnings, that, for example, including the revenue coming from the service, the new string of the revenue, also the improved and stabilized margin. I think that likely to carry on in these earnings, potentially putting a bit of the confidence back into the market darling. Apart from that, I think the outlook that the oil price is getting so high would naturally give a bit of a tailwind for the EV producer like Tesla, would potentially be another catalyst and bring a positive outlook for Tesla as well. Now, look at the technical wise, that we do see the prices has been sort of rebounded quite strongly from its 340 bottom that happened in the early April. Apart from that, we're also seeing a couple of the quite positive bullish side. One is that it has broken above the descending trend line starting from early 2026. I think that's a positive side. Apart from that, the prices has also stepped above the 20 and 50. Now it's trying to conquer the 200 days moving average, which is roughly about 400 level, and that also a psychological level for Tesla to conquer, and I think that will be a critical test for the upcoming earnings as well. The only thing probably a little bit concerned is that prices is getting into the overbought area. If you're looking for the KDJ, is now getting into above 100. I think that's a quite high level, potentially means a bit of a pullback or consolidation is quite likely. So for the upcoming earnings, if there's any bit of the negative surprises or even lower earning per shares that can't even meet the very low expectation, chances are I think the prices will pull back, but still the 470 between 470 to 490 will be quite a strong buffer for the prices to consolidate before the next legs up. I think overall the setup shows quite constructive, and potentially we're seeing the prices will rebound, continue its momentum moving forward.
That is the view of Tesla. Hebe, let's now turn to commodities with a focus on silver. And in fact, some of those moves we saw in the past couple of months, it outperformed its cousin gold. What are you seeing on the chart right now?
Yes, I think silver is probably one of the number one asset that has experienced such dramatic volatilities in the early days of 2026. We still have quite fresh memories about how silver performed in January. And the prices pulled back quite significantly starting from the last day of January to the March. But we starting, if you're looking for the charts either for the daily or the weekly, this week, you can see that silver is starting to transition from correction into recovery, and the setup is becoming quite increasingly constructive on both the daily and weekly charts. So focus on the daily one first. The price has stabilized around the 70 and 75 support area. That's a key base, as you can see, and that's also the bottom when the price first pulled back. And since then, the price actually not only that didn't breach below the 200-day simple moving average, it also didn't breach below, quite meaningful below the 70, showing there's a bit bottom, a quite strong bottom at the level. Now the prices has rebound quite strongly. Not only that has been up about 20, but also 50 and 200, so showing the quite strong momentum and the return of the buyers at this level. So at this stage, you do see the prices standing just above the support from the 50, about 78. Above that, we do see the 89 will be a critical resistance. That's the level that has turned from the previous support to the resistance level. So I do expect that prices will consolidate and takes a bit of time. But before that happens, that in between the now 79 to 89, there's quite limited resistance. Stop the prices to conquer, to moving towards the 89. The only thing for the daily is similar to Tesla is that also KDJ also showing a bit of the desk close that is now pointing to the south. But if you refer to the weekly side, weekly chart showing that it's still sitting at a neutral level, so showing the upside potential still remains. So overall, either from the daily or weekly, you can see that the bias really quite meaningful return for the silver, and the prices, the path towards 89, even above, I think is quite likely.
And finally, Hebe, let's turn to our own local market with a focus on Pro Medicus. Now, it has been caught up in that SaaS apocalypse. What are you seeing on the chart?
The reason I'm talking about PME is because I think that it kind of tick two key boxes. If you're looking to sort of catch up for if the market really recovers and the chances for the Aussie market to follow the Wall Street to getting the all-time high, PME is the one that with very, very strong fundamental. I'm putting up a couple of the reference here, so you can see the recent record high earnings profitabilities, as well as the fundamental, the return on equity is also very high, above 50%. And the second one is the technical setup is starting to mirror a very similar pattern we have just experienced last year. So I'm putting up two red square. You can see the prices showing quite quite similarities that in between the Fed 2025 to April 2025, and the past 2 months, the price both down 45%. And what happened back to 2025 is the price rebound from the level up about 106% to its new peak. What's slightly different for this year is the prices, the past 2 months 45% down is adding into the already about more than 50% down. So which means that if the history kind of similar repeat itself, the chances, the potential or margin for the price to bounce back is even much larger. But that doesn't mean the volatilities will be just go away from this level. We do see quite near-term key pressure levels that has just right around the corner. That's in between 150 to 176, and that's the price gap left in early in February and April. So I think these two levels will be the critical challenge. If the price broken above this level, the chances for the another 20 to 30% up is quite likely.
Key levels to watch for Pro Medicus. Heavy, great to get across those charts. Thanks for joining us on Vantage Markets. And that is the trade.